These are the big risks for emerging markets in 2019. Emerging markets are tentatively picking themselves up from the floor after a rout that's wiped about $5 trillion off the value of stocks since a high in January 2018. Rising rates in the U.S., Beijing, and Washington's trade war, lower oil prices and the emergence of populist leaders in Latin America's two biggest economies could all weigh on markets. Emerging market assets have already bombed, so the downside, if things get worse, is much lower, and if things recover they have greater potential to perform, said Anthony Peters, an independent analyst. However, they have the potential to go much lower for much longer than anybody had ever thought possible. The Fed and the dollar. A report said President Donald Trump has repeatedly discussed firing the central bank chief, but Treasury Secretary Stephen Mnuchin moved to reassure financial markets. The European Central Bank is set to end asset purchases that have pushed billions of euros into higher-yielding markets such as Poland and Hungary. In emerging Asia, economies heavily reliant on foreign investments, such as Indonesia, will face the challenge of maintaining currency stability and stemming outflows. Trade wars in China. Chinese President Xi Jinping remains defiant, telling some of the nation's most influential military and business figures that Beijing won't back down quickly to U.S. trade and investment demands. The U.S. trade delegation is preparing to travel to Beijing for talks slated for the week of January 7. Populists. Brazil and Mexico start 2019 with new populist presidents, albeit from opposite ends of the spectrum. In Mexico, leftist Andrés Manuel López Obrador has traders on edge after canceling a $13 billion airport. Russian sanctions. Even after the U.S. Treasury said it's ready to lift sanctions on one of Russia's biggest companies, United Corazon, investors will be wary of moves by Congress. Saudi oil woes. Brent crude's plunged since early October to below $55 a barrel is bad news for many major developing economies, not the least Saudi Arabia. It needs prices as high as $95 per barrel to balance its 2019 budget. Elections. There are plenty of upcoming polls to keep traders on edge. Indians vote in a general election in April or May, and analysts at Credit Suisse Group AG say markets haven't priced in the risk of a coalition government emerging. Thailand is set to hold a vote February 24 after several delays since the ruling party took over in a bloodless military coup in 2014. And investors are worried about the prospect of social unrest. In Argentina, Mauricio Macri, who's popular with foreign investors, faces an election in October. South Africa's election in May will be a key test for President Cyril Ramaphosa. If his party fails to win a significant majority, it could trigger a credit rating downgrade and billions of dollars of outflows. Source: https://www.bloomberg.com/news/articles/2018-12-31/oil-populist-leaders-and-the-dollar-guide-to-2019.